The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 10 a.m. Eastern Time, Tuesday morning, 30 minutes into the trading day. We got a mixed market so far. Big day of retail earnings. Walmart, Home Depot, Kohl's. We'll get into all of that in a moment. S&P's right now positive by 1 point, trading at 29.54. You get the NASDAQ positive by 50 points. That's about 0.5%, trading at 92.84. The Dow negative by 68, trading at 24,528. Russell negative by about 15 points, or just more than 1% at 13.19. We have the oil contract up 47 cents at 32.12. Gold up $6 at 17.40. And we got a treat. We got our man Basil Chapman filling in for Tom this morning. Basil, good morning.
Good morning to you. How are you?
I'm doing fantastic. How's your Tuesday morning starting off?
Tuesday morning is very good, and I have to congratulate you. You do a fabulous job between 8:30 and 9, just giving us a good synopsis of what's going on in the market, the fundamentals, the technicals, looking at the different stocks that are of interest. Terrific show.
Well, I appreciate it, Basil, of course, and you, of course, at noon. I know you covered for Larry yesterday. You're always putting in some good programming. And speaking of good programming, we got action in the market. Let's go over to our man Kevin Hinks from TD Ameritrade Thinkorswim. Fast Market, folks. Right after this program is Fast Market, and then right after that is Basil with the Tiger Technicians Hour at noon. So Fast Market at 11 Eastern Time. Kevin, the team, Alex Coffey at Thinkorswim, TD Ameritrade Network. Kevin Hinks, good morning.
Good morning, Tommy. Good morning, Basil.
Hi.
How are we doing today?
We're doing great, Kevin. Quite a day yesterday, of course. We don't talk to you on Mondays, but man, oh man, quite a day in the markets. And we got quite a reaction to the earnings I was talking about. I mean, Walmart, some huge numbers, man. But you look, they sold off. They're only up barely 1%. Kohl's, of course, tough numbers. Home Depot out. What are you looking at in the markets this morning?
Well, today we're going to cover two more big retailers, and that is Lowe's, the main competitor of Home Depot, and Target is who we're covering on today's show. But yeah, we knew that Walmart would have great earnings, right? And we knew that the numbers were going to be staggering. And Home Depot, they were actually fairly healthy earnings, just not as great as everyone thought they'd be, and their stock has run quite a ways back up, basically to the all-time high. So
sure.
The fact that Home Depot's backing off, not real shocking here, but the numbers out of Walmart were staggering in terms of numbers. $134.6 billion in revenue, and how about this? E-commerce sales up 74%. That is just hard to fathom, although the environment that we're in right now, not unfathomable with everything that's going on right now. But, Walmart is it's amazing. They've hired 200,000 additional employees. So that was some of the main expenses that they've taken on during this quarter. So a lot of stuff going on, guys, after yesterday's absolute mammoth rally.
I agree. I mean, those numbers out of Walmart, to be a company the size of these companies, Kevin, when you start talking about at Walmart, I mean, you're going to see similar action in Target, just mammoth numbers, tens of billions of dollars, if not hundreds of billions of dollars, and Walmart grows at that percentage. What I found interesting is that just the opening action, and we'll see how, you get Target, you got Lowe's, Home Depot, because Walmart was up all the way almost to 134. We're up about 1.5% right now. Still, as you mentioned, these stocks have priced in a lot of great success. I mean, Walmart right up near the highs. We had a 133. But you actually had Walmart pulling back. You had Target pulling back on the open, and Target actually negative after being up to 128.10, Kevin. We're all the way back to 124.21. And what do you think charged higher, Kevin, as Walmart and Target pull back, you had Amazon trade. Now Amazon up 1.5%, continuing higher. So just an interesting, reaction for those two companies, because I anticipate Target's going to have big numbers. And let's see what that Analyze tab on the Thinkorswim platform. So Target's pricing in $7.29, that expected move for their earnings, Kevin, as we look to that number.
Yeah, isn't it interesting that Walmart comes out with some record massive e-commerce sales, and what rallies off that? Amazon.
I couldn't believe it. That's why I brought it up.
Because they're mainly considered the leader in e-commerce retail. So those good numbers, it's just fueling into Amazon's popularity.
Kevin, is this possibly the Chevron, Mobil, Exxon, the same as we saw in the 1900s when you had the multinational oils? There were so many, and then there were three, and then there were, they just kept whittling away and getting taken over. Are we seeing the same thing now? This is the next phase in the 21st century. We're looking at retail, Amazon, Walmart. Are we just going to filter down until we get like the auto companies, share of Ford? Is that what's happening here?
Well, it's certainly, this economy that we find ourselves in, it's moved away from some retailers and towards others. And if you didn't have your e-commerce infrastructure set up, you're probably, being hurt very, very badly. So the companies that, like Target, like Walmart, that have their e-commerce infrastructure set up already and spent the money to do that, they're going to flourish. Because I think what you're seeing here are two things. You've got a whole new demographic of shoppers shopping over the internet, using e-commerce for the first time in their lives. And guess what, guys? A large percentage of those are never going back, right? The elderly people my age and above are going to start shopping online and realize that how convenient it is. And so not only to mention the fact that brings in a whole new level of consumer that may not have wanted to ever go into Walmart. But guess what? Now with e-commerce, you don't have to.
Right.
So people that wouldn't shop at Walmart are now shopping at Walmart.
I completely agree, Kevin. You get it delivered or you have the curbside takeaway, which is great. I've bought a couple things over this time at Dick's Sporting Goods, and they actually have curbside takeaway during this going on. You don't even have to walk into the store. It's like picking up Outback takeout. I mean, amazing how things are changing on that front. Kohl's had their numbers today as well, right, Kevin? Quite a sell-off. They're down about 7%. It makes me think of one of those companies that might not have been completely ready to compete with a Walmart, a Target, and the likes. And, of course, you had JCPenney with the bankruptcy. I'm not sure if you heard that who is thinking about maybe picking up some or all of their assets out of bankruptcy, but none other than Amazon. So I'd say Basil, right? It's interesting. You on the day you asked that question, you have Amazon considering picking up JCPenney assets out of bankruptcy. Talk about being in a good position to maybe consolidate some.
Pennies on the dollar, right?
I know, right? Well, Kevin, we look forward to it, man. Of course, Target. And what was the other one we were talking about? Lowe's. Two companies with earnings coming up on the heels of Walmart and Home Depot. Well, folks, right after this program, 11 o'clock. Kevin, we always appreciate the update, man. We look forward to the show, and have a great day.
Nice to talk to you guys. Have a great day.
Thank you, Kevin.
You as well, Kevin. Stay tuned, folks. Baz and I coming right back. Don't miss Kevin's show after here. Great
If you're
program,
not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everybody. Tommy O'Brien, joined by our man Basil Chapman. And you heard the ad on there, folks. I'm going to jump right over. Basil did a great workshop a few weeks ago. Amazing how time flies, Basil. But Larry Pesavento, coming up 2 days from right now, he's going to be in there for an all-day webinar right on the front page of TFNN. You just heard Larry's great show at 9 o'clock, Trade What You See. He's going to be in there Thursday morning. Now, Larry's going to be doing Tom's show this afternoon. Tom out today. He'll be back tomorrow. That's why we got our man Basil Chapman filling in. But Larry, check it out, folks. It speaks for itself. Check it out on the front page of TFNN. And when you come over here, newsletters or services, you go over to services, and I'm just going to give a quick plug because there you see all the three of them. So there's Larry's. He's doing it in 2 days. Tom did one on April 30th, and Basil had one back just a month ago as well. You can check out all of those. They're still available, the archives. That was a great job you did, Basil, kicking off the string of these that we've done in terms of an all-day webinar. And, man, the volatility just continues with the markets up about 3% almost yesterday across the board. And I know you have a chart of the S&P up here. So what are we looking at in the Chapman wave, Basil?
Do this. I've just got the 1 minute E-mini here. You know, I like to
1 minute. We're breaking it down. All right.
Just got a peak F there. So we're pulling back sharply here. So this is really important as far as I'm concerned. We're as technicians, you look at the charts, and that's the fabulous thing about what Larry's going to do, because as those attendees who have been to these all-day webinars like Tom did last week and what I did a few weeks ago, we don't know what's going to happen next. So you put everything on the line, you put all those years of experience, you put all the chart formations that you look at, and then you say that the chances are, based on the parameters that we've set, based on our knowledge, based on the technical considerations, that whatever we're following should do this. And that's
sure.
The beauty of it is that you learn in real time, because no one, that means the attendees or the host, knows exactly what's going to happen. You just prepare and you show all these different techniques, and as they unfold, the learning experience is really fabulous because you get to understand how it was set up, what you're looking for, what you're following, and what is correct and what is not correct. I think this is just what a perfect opportunity, especially with someone like Larry who's had decades and decades of experience. Just a great opportunity. So certainly I would highly recommend
that's greatly
that.
said, and I appreciate you doing a great job in there all day, man, because there is nothing like experience. And no matter how many theoretical chart formations or theoretical formations and trades you set up, right, there's nothing like experiencing a market and looking at what it's doing and examining the what if then type scenarios that play out with the volatility we're seeing. And it's interesting just going back to some of the headlines to see it, because on the retail side, they were staggering numbers, and it's an interesting reaction how all these traded on the open. Basil, is a great question in terms of, is there consolidation? You look at what's happening, right? And these stocks even delivering to this level. So Home Depot sales rose 7%, and these are just amazing numbers when you look at what they're comparing to. Revenue for the quarter rose 7.1% to $28.26 billion from $26.34 billion a year earlier. They added $2 billion extra in revenue just from last year, topping the expectation. They were looking for about 27.54. We talked about Walmart earnings, which were 10% same-store sales, and you also had a rise of 74% for their online. Kohl's, on the other hand, I had mentioned on my program, Basil, I was surprised that Kohl's was not actually getting punished harder. Their net sales taking 43%. The big thing I saw here, Walmart's going nowhere, Target's going nowhere, Amazon's definitely going nowhere. But when you have Kohl's reporting a net loss of $541 million, or $3.50 a share, and this company only has $2 billion in cash on hand and $500 million in available revolving credit. If you're losing $500 million,
spending a day, I can imagine.
$500 million in 90 days, Basil, and you only have $2 billion in cash. I think we can all do the math that's simply 360 days of business, and you're out of money for a company losing that type of coin. And they are down 6-7% on the open. But you look at Kohl's, there's your acceleration down about 8% now. But even a company like Walmart, barely positive, more than 1%. And you have Home Depot shares actually down 1.8% on that number as well. Growing the revenue, but Home Depot getting hit more on the earnings side, and Amazon, you just can't stop it, up 1.6% on those numbers.
So if you don't mind, I'm going to try to put I can't really call it the fundamental picture because it's an ongoing situation with the coronavirus, but in a sense, it really is a fundamental, because until we get this right, we will not get back to normal. That's for sure. But At the same time, look at this Home Depot. The price that it hit yesterday of $248.32, and the price that it hit in February of $247.36.
Yes.
So this is the dilemma that technicians, I think, are having, and people who are let's call them economists, or it doesn't have to be economists, but it's people that are involved in looking more at the vernacular, that is what's going on in the different states and cities, to a technician. Here we are with Home Depot. Now, I don't know if you've been to Home Depot. I've been quite a few times over the last couple of weeks. When you talk about social distancing, yeah, you can get people standing in line, but once you're in there and you're in the aisle, you're crossing paths within 1 foot, right? So how do you square that with a hairdresser who might just wash, who might get everything spotlessly clean, who needs to survive to get money? So this is a really big dilemma where you've got politicians. Not one of them have lost their job. They're all getting their full salary, plus their pensions, plus their medical care, everything. They can make decisions. And this is like the theoretician who's talking about one thing, and the pragmatist who's out there and saying, wait a minute, I'm in the real world. Where are you? So that's the big dilemma. So I'm not making a political comment here. I'm making a statement that says, as a technician, I have to look at the chart. But wow, in the backdrop, I'm saying to myself, Home Depot goes from the 240s down to the 140 level in 2 months. And 2 months later, it's back to just about the all-time high. And yet it reported the earnings. The earnings were good, very good. But it's not like business is normal, right? So I've got to say to myself, if it makes a new recovery high, I have no choice in my work in the monthly chart but to call it new leg A. That's really bullish for the monthly chart. Now, that can change because we're only technicians and the market is the market. We just have to follow it. But isn't that interesting? If you look at the QQQ, how on earth could the NASDAQ, the Index 100, be within 229, 237, within less than 10 points of its all-time high? Well, one of the things that we can look at is that the NASDAQ has a greater number of businesses that are affected differently. It's the electronic age. As we were talking about with Kevin, so Walmart and Amazon, this is the electronic age. And I think that's how we have to define this. So when we get back, I'll tell you something I thought was quite interesting in the chart formations.
Perfect. I mean, we're going to look at, right? I mean, Apple, Microsoft, Netflix, Amazon, even Google, all of those contributing, I'm sure.
21st century stocks, yep.
We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I'm Tommy O'Brien, joined by our man Basil Chapman this morning. We have S&P is basically positive 1 point, NASDAQ still positive 61, and the Dow in the negative. So to continue that conversation, Basil, as we're tying things up.
So what I wanted to say is that the RTH, which is the Van Eck Retail ETF, is Also very close to an all-time, this is the retail ETF all-time high, which was in February of 127.36, and the high today is 126.54. So that says, unbelievable. How can retail, when the malls are closed and all that? Wait a minute. The XRT is the S&P retail, and that's way down. It's trading right now at 38. It had an all-time high in the 53 area, plunged down to the 26s. What's the difference? Amazon. So that's what I was saying. 21st century, you've got Walmart, they've moved into the 21st century. That is Walmart, Target, and you've got Home Depot as best it can. It isn't quite there, but it's getting there. But Amazon. So this is the difference. Look, Amazon has helped the RTH, which is the S&P retail, get within fractions. So I think that defines it. Now, for me, the big question is this. But the chart formations now are completely different to the 1929 scenario that dropped from the Labor Day weekend high of 386 down to 195 in November, and then it rallied sharply 51% into April. So it took 4 months to get to April's high of 1930. And that was it, because everyone who thought, oh, my God, I sold everything I should be buying, and they bought again. Of course, it went down to 40 back into 1932 low. Now, what's interesting here is that this was a medically induced, aborted, major mega bull market rally. It wasn't the final. I feel so silly. I'm looking at I just have dozens and dozens of books on the crash of 1929. I've studied them. I've got microfiche from the library back in the 1980s that I got these huge microfiche that I got copied into full size of the New York Times and many of the days of what happened in Black Thursday, Black Friday, all those days. And I feel so silly because we had a 39%, basically a crash in weeks in the Dow. And that wasn't a financial collapse. It might produce a financial collapse, but that wasn't because of excessivity. Look at the IAI, something just full disclosure. We are long for my subscribers to my opening call. This is the iShares Broker Dealer ETF. It's trading at 58. It made a low of 42. That's because you did not see the excessivity of 2000 and the dot-coms, of even though it was a housing bubble and financial bubble in 2008, 2009, the brokerage index still went to highs. This is completely different. Nobody's been talking about the stock market for a year now, and it's been going to all-time highs. So I'm looking at this and I'm saying, wait a minute, will the result be the same? Or is this different? Was this something, this is a hiatus in a mega bull market, and maybe we're going to start seeing factories come back to the United States? Is this the start of something much bigger? This is a question we can't really, I can't answer it, but I have to pose the question because we did not get that excessivity at the top that we normally do. And that to me is just key to this whole thing.
I see it, as it's a tough economic deal that's going to persist for a while, especially in certain sectors that you're going to be hit. But it's also just accelerating the massive change in technology playing out in terms of the likes of even and you got to group companies like Walmart and Target in there, as they have that huge online growth and they are aware that they had to compete with Amazon. They were probably just at a point that they were actually able to make that happen, right? To handle the acceleration online, the surges of orders that they're going to get. Walmart showing that they were able to do it at 10%. And I've been to those companies myself. I'm not always at Walmart, right? I love Publix. They do a great job of grocery, private company here in Florida. So usually that's where I'd hit up. But guess what? In this time, Basil, right, I'm stocking up. So stocking up, I'm going to more, I'm a member of Sam's, which is Walmart, number one. And then you have Walmart itself, which is interesting as all these play out. Now, Disney, Netflix, that whole play out in terms of people canceling the sets, how you go there. But we see it in the likes of Kohl's, not really on the forefront of a company. I see it as those companies that were just getting by, right? Like Kohl's is a great example, I think. And be wary of the stock, and I'm tying fundamentals into this. But they made $60 million, I believe, last year. Yeah, so Basil, they pulled in $3.82 billion a year ago in their quarter, and the retailer reported a net loss this quarter of $541 million versus a profit of $62 million last year. So last year, they're already struggling, right? They take in $3.8 billion in revenue, and they, for all intents and purposes, they almost break even, because $60 million is $60 million. But that means that you had sales of $3.82 billion, and you had expenses of, what is that, 3.72, right up there in terms of what they're pulling in. And guess what? They were just on the teetering edge of anything going wrong, right? And now they're going to be in big trouble, losing $500 million a year, and they only have $2 billion to go.
Probably they also did not have the kind of capital to allow them to invest. It's very expensive to go into the internet and to do all the things that Walmart has done. So that puts them behind the eight ball immediately. It's very tough.
So I imagine that would have played out over years, right? We would have seen a long stretch, but guess what? Everything is accelerated. 10%
So isn't
growth.
that interesting?
Yeah.
Because we can tell within a split second what's happening 6,000, 9,000 miles away, the condensation of the rollover of a particular era going into another era, or any time frame going into the next time frame, is all speeded up. And perhaps this is in fact the precise picture that we should be looking at, that we've got speed, and maybe this 3 to 6 month, I don't even think you can call it a recession, and you can't call it yet a depression, but all the statistics are depression-like, could be a real squeeze in time, because that's the era we're in. And then it starts to slow down a lot more, maybe in 4 or 5 years' time. Maybe that's what we're looking at. So I have to look at this and say, all I can do is the chart work. We remain long. We've got only long positions. I'm looking at shorts, and when I've tried to have shorts, I've made it very tight stops. We're in, and we're pretty much out almost the next day, because this market has been just a monster bull market. Even in the comeback, at some point, let me just show this chart here, because I think it's always fascinating to get. For me, I like the picture of something. So this is going to the Indu. This is the Dow. So, was this the right one? Yep, this is the wrong chart. Sorry, I wanted to show the chart where I talk about the news, this dark cloud news cover, and you can see that we've started to flatten out. There's a lot of resistance at the top here, so maybe we're in a trading range, and this is going to be a very well-defined trading range. We know exactly how we break out or break down.
Perfect. We'll check it out after the break, folks. Stay tuned. Battles and I come right back. Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien, joined by Basil Chapman this morning. Markets ticking down a bit in the last few minutes. S&P is negative by about 8 now. NASDAQ positive by 41. The Dow negative by 150. So I know we were talking about the Dow, Basil, and that dark cloud news cover. Bring it on.
So basically what we're looking at, if you're looking at the Dow, and I think that the Dow is really perfectly placed in terms of its components, even though it's not the Dow Industrials anymore, this is really the Dow 30. That's all it is. You can't have pharmaceuticals in an industrial. You can't have a Microsoft, but maybe the new era where you're looking at a Microsoft and you're looking at something like an Apple as, oops, that was a glass of water. Just as well, It wasn't over my computer. It wasn't. So what I am looking at here is that since about mid-April, look, the Dow has had a struggle. And that's just telling you that the upside resistance is quite strong. And it also tells you that at 24,420, and yesterday's high was 24,708, if we're able to start trading, not just pop once, but trade into the 25,300 level, about maybe 1,900 points from here on the upside, I think that will bring in a lot more institutional buying, because what it'll say is that all the negativity that we've seen has been supplanted by a big cushion in the 23,000 area for the Dow. And if you're looking at, so I call this the dark cloud news cover, because we aren't getting the kind of, look at that, can you imagine at that low on the 23rd of March, if you had to Google and you had to Google bad news, you would have had a spike like we haven't seen, and we saw that reflected in the 2 times long volatility index, the TVIX. So if I put the whole picture together, I'm saying to get the kind of negativity that we saw in the TVIX going to 1,000 on the 18th of March, I don't know what could get us there. I think maybe we could see a 500 again if there's a recap of some of the states having just a lot of reported new cases. Maybe that's when it could happen. But
Sure.
So far, the market, if you just look at the market and say, okay, market, tell me what you're thinking of the news. When I go back to this chart right here, it's saying, I'm not saying ho-hum, but I am saying, let me go over here. I am saying that there's a lot of resistance levels but it's basically held. Look at this. Every time it pulled back, since it broke out, let's call it the week, the 6th of April, that big breakout, ever since it's broken out, it's held key support levels. And that, let's just call this low of the 21,693. The low that we made the other day was 22,789, 1,000 points higher. So it's just saying that, yeah, we're not breaking to the upside right now, but the market is actually handling the news pretty well at this particular point. And if you look at the QQQ, it's saying, this is what we were talking about before, the rotational sector, the rotation into the 21st century stocks, like an Apple, like anything that has to do with what fits culturally, in other words, the speed with which you can receive whatever it is you're ordering, getting internet, getting those things that make us the 21st century so different from the 20th century. That's what's working, and that's, I think, is exactly what you can see in the difference between the XRT, which is holding quite nicely. And I'm going to say again, this is retail, so isn't it remarkable that we're actually up at this level in retail? When you think about it, this would include a lot of companies that are not doing anything close to the kind of internet sales that other, the ones that are like a Walmart, and the RTY, which does have Amazon, and was that RTH? Sorry, RTH, and that does have Amazon.
Big difference.
So I just wanted to say that we're looking at a dichotomy, two different worlds, and as technicians, we have to deal as best we can at looking at our stock chart world. There's another part, there's another shoe I'm sure that's going to drop at some point, but we really have to try our best to separate these two aspects.
They are. And, it's interesting trying to tie that fundamental aspect into things, because a lot of it is something nobody's ever experienced. And we're dealing with the pandemic. We're dealing with shutdowns. People are opening back up. I was at the beach myself last Saturday, Basil. Everyone behaving pretty reasonable in terms of social distancing. Fort DeSoto over near St. Petersburg. So that was a good experience overall.
But you got to... We do know that changes. The more people become familiar with that surrounding, the less they're going to worry about.
So what did happen is that as we were leaving, we had a gentleman came up just to say hello. In any other normal life, it would have been completely normal. We were just getting ready to leave. There's a lot going on, and I actually had to ask him to take a step back for some social distancing. Maybe he'd had a couple beers. He was having too good of a time. So there was that moment, and already there was that moment, right? Wasn't going to mention it because it really wasn't a big deal. All in all, everyone was social distance. But we weren't in Clearwater Beach, which is where you see the real tourist action there. But since we mentioned it, just to keep in mind, I have the numbers up here for Florida, and you see, Basil, on my chart, the trend was declining. This is the 7-day line, the red line in bright. But if you take from April 25th in Florida, that starts calculating into the 7-day average about here. You do see an uptick. So hopefully people just behave safe. People should be open. But that's why we still need that need, whether it's, wearing a mask. I know, gloves. They're talking about the den, of course, as well. You do want to be careful. I wear them myself only because if I have dry skin sometimes, but I do throw them out immediately. It's not something I'll wear from one to the next. I assume that they are contaminated. You go into the grocery store, they're gone. I'm not touching anything. I'm treating them as my hands. So you do want to just be safe. We have, hair salons opening back up this week and last in Florida, Basil, non-contact temperature checks, masks being required. I think that's a great idea because you look at these numbers.
All of these are very simple things to do. I understand people talking about our civil rights and all that, and I understand other people saying it's selfish. And, if you just keep a little perspective, it's not a big deal to put a mask on. It's not a big deal to put gloves on.
Because we will tackle this.
Everybody back. Yeah.
And I say this is not a forever deal, folks. We will tackle this, but we're still battling this. And that's why, if you asked a lot of people, are cases coming down in Florida, they'd say, of course they are. Well, I challenge you to look for the data from April 25th. That is a rising trend. We're chartists, all right? You look at that data. 306 is the low, 347 is the low, 371 is the low, 386 is the low. And meanwhile, we're approaching almost 1,000 cases versus Massachusetts. Thankfully, things really declining. You guys, Basil, had cases above almost 5,000 at one point. But just be safe out there as that continues, because we want to make sure that we squash that. And hopefully they get that vaccine kick in. Moderna. How about Moderna, Basil? We'll jump to that. coming out, and they're going to raise $1.34 billion with their new valuation of shares, mRNA. They were up to 94. They settled at about 80. That offering at about 76, I think, and the shares back a bit today at about 76.30 on that number. But quite a story.
We were talking about speed. So look at the speed. Look at this monthly chart of Moderna. This is a company here in Massachusetts, the Boston area. It was doing just absolutely nothing in the 10s the other day, and yesterday it spiked into the 80s. Now,
I read a story this morning about an MIT professor, right? Newly minted billionaire at that price tag. As he should be if they get it done. Why not, folks? Stay tuned. Basil and I coming right back to finish up the program, folks. Stay tuned.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps popping a bit since 10:45. We're up about 10 points, 29.49, 10 points from that low, that is. We're at about 10:45. And, folks, if you head on over to the newsletters tab, you'll see the Opening Call right there. You can sign up for Basil's daily trading newsletter, the Opening Call. Basil, I pulled up your archived webinars here just in February 13th, a timely webinar you did, that dark cloud news cover. Folks, you gain instant access to all of these archived webinars right when you sign up for the Opening Call. You can check that out along with, of course, Basil's opening call newsletter in there every day. Of course, he had Monday, he had a Sunday report out there for subscribers, an option update on Friday, all of that. So check it out under the newsletter tab at TFNN.com. So it should be interesting, Basil. We get Target and we get Lowe's today. And what are we going to be talking about on your show at noon?
Well, there are a couple of things that are really important at this particular point. When you have a 1,000-point rally, it's just a natural thing to pull back to the last, usually it's the last hour and a half of the gain from the previous day. Well, we had that. I was anticipating for subscribers, I said, by mid-session, towards the end of the session, I think we'll have a bit of a pullback going into Tuesday morning. We've done that. And it's just remarkable to see the S&P is unchanged at this particular point after such a big move. So I think that yesterday was not just a short squeeze. I think there were new buyers, and we'll know that if the Dow is able to push to the 24,600 or 700 area by Friday, and if the S&P, which is trading at 29.53, if it's able to garner some more points and stabilize, I think it's going to force people into the market over this particular period. That doesn't mean to say I'm not expecting another shoe to drop, because some states are going to have an acceleration.
We just pulled up those numbers, right? Exactly. And there's a lot of leeway. I have the volatility up here on my chart. I mean, just last Tuesday and Wednesday, we were down 2.1 and 1.7%. So volatility is here, folks. Don't be fooled by yesterday's action. Basil, thanks so much.